Good morning. Brenden Rendo with the Homes in Orlando team, joined again by Joseph Dionne of Appli Home Loans. Good to see you. It's been a while.
I know. I feel like I've been all over the place this year. And then when I wasn't here, my internet completely crashed, which thank you, Spectrum, for finally figuring that out for me and removing the equipment that you guys shouldn't have had installed at my place of business.
Always something. Well, we've got a lot to catch up on. Fed raising rates 1/4 point, but interest rates going down.
Interest rates go down.
The market's really kind of stabilized.
Yeah.
Florida, still the hot spot to move to. And are we going to have a spring inventory problem?
That's the question. I think we're going to be able to dive in and see some of those numbers and what we think is going to happen today.
So news yesterday, and pretty much everyone thought this is what was going to happen.
Yeah.
Is, they increased interest rates again, about 1/4 point.
Yep.
We're really starting to see the effects in other parts of the country. Again, we're on our little island here, where you're seeing numerous layoffs.
Yep.
Throughout the country. Tech, of course, is one of the big things.
Yeah.
And it's interesting to see how that's affected other markets as opposed to us. Because California, San Francisco, they've had a 30% price drop.
Yeah.
In the past 6 months. That's big.
And it's like, you look at it, it's like California is a tech hub, right? Like that's where so much, like Florida, for all that we've ever tried to be tech, we don't have a huge tech presence.
Yeah, not really as it's good, but it's not like we used to be so Disney dependent. We've got a good diversification.
Yeah.
And so when we're losing a little bit here, we're able to make up a little bit over here.
Yeah.
And right now, our construction is still strong as can be. You sit and read the Orlando Business Journal and you see new development here, new construction here, new apartment building here, new commercial spot being built over here. So that's continuing to fuel what's going on in Orlando centrally right now. And I think that's a big reason why, we'll see it that, our average and median price really hasn't dropped off nearly as much as everybody else's.
Yeah.
Because it's interesting when you sit and you look at the headlines and you're kind of like, okay, here's Fannie Mae coming out and saying prices are going to continue to drop.
Yeah.
Okay. Continue to fall.
And they're looking at it from national
that's the thing.
Right. And that's the hard.
All these headlines are national. These are national headlines. But then here you got this one, mortgage rates down and the home buyers are on the rise. I think you mentioned, talking, you've seen an influx of new loan applications.
Yeah. I would say, honestly, we're the busiest that we've ever been as a company. Granted, we've only been in business for we only opened our doors about 1.5 years ago, but we've seen more applications in the month of January for pre-approvals and so forth than we've seen ever.
Yeah. And I think a lot of that goes back to discussions we've had in the past, which is, hey, people don't like instability. Back in July, August, September, when rates were jumping all over the place, people were feeling very unstable. And kind of nervous of, should I buy now? As a seller, you're thinking, ooh, what if rates go higher? I'm gonna be stuck in my house. I'm gonna have to pull it off the market.
Yep.
That's stability is something that people want to see when they're getting ready to buy a house. They got to feel comfortable.
Exactly.
Overall. And I think we've hit a kind of a smooth patch so far, for the past, month and a half.
Yeah.
If we go back and we look at January 5th, we were at 6.5%.
Mm-hmm.
And we've dropped down to just over 6%.
Yeah.
And that half a point and that steadiness has really, really helped a lot of people. I know one thing I always look at is when I'm out showing clients on Saturdays and Sundays, and there's an open house, you go to look to see how much traffic is in those open houses. And the past couple of weeks, you're actually starting to see. It used to be, October, November, December, we were the only ones in the open house. We'd walk in and we were the only people. We could take our time, didn't feel pressured, anything like that.
Yep.
Now it's back to you go in, you've got maybe one or two other people in that open house at the same time.
Yeah.
And I actually got into a multiple offer situation earlier this month on a closing you and I are working on together. That we actually had to come in actually just over list because we were competing in a situation where cash versus a mortgage.
Yeah.
And there wasn't that much else out there to really take a look at. That was kind of frustrating.
Yeah.
So, but
that tells the tale right there, right? Like that's why Florida is different. Like it's much tougher. We're seeing inventory go down. We're seeing this, and now we have a situation where consumers are seeing the national headlines, and the micro being right where we are is a much different picture than the national. Like it's really hard, and that's where we've got to come in and educate our consumers on these different pieces because I still have clients where they're like, all right, I'm going to submit an offer. I'm buying $500K. I'm going to offer $450. I was like, yeah, not going to, unfortunately, it's not going to work. Like not right now. 6 months ago, maybe not right now.
Yep. Well, one of the big things, and NARC just came out with these numbers, is these are the top spots people are relocating to.
Okay.
Florida population last year alone grew by 318,000 people.
Okay.
That was nearly a 2% increase in our population. Did we build 300,000 homes?
No,
we didn't. Not even close. Maybe 50,000, I think. I got to look that number up because that's just an interesting number to think about.
I'm looking at that. Areas with the largest inbound: Ocala, Tallahassee. We got Deltona. We've got Miami. So you're talking of the top 10, 4 of them are Florida.
Our Florida. Yep. And it's interesting because I was having a conversation with one of my clients who has a number of friends who are investors out of Miami. You know where they're all coming up to? Ocala right now.
Yeah, it's still affordable.
It's still affordable. So we're looking at that going, okay, I can buy right now, hold it for a year, and I can get it maybe a 10% increase.
Yeah. Because
so many people are moving there. I mean, then you got Tallahassee. The one that's affecting us is Deltona. And I can vouch for that because one of the places that I do a lot of work in and do a lot of advertising for is Deltona. And the prices came down a little bit.
Yeah.
But they've really stabilized. So I probably get 10 people a week new buyer opportunities looking in that Deltona area. Because a lot of them are coming from the north where they can sell their house, for $700,000-$800,000, Connecticut, New York City area, the boroughs, all that kind of stuff. And they can come down, buy a nice 1,800 square foot house.
Yeah.
With a pool right now for $350 and a little bit below.
Yeah.
So why wouldn't you? And you're retired. And then you've still got $300,000, $400,000 in your bank account. So that's definitely one of the things that's driving prices not to fall.
Yeah.
You can't have that big of an influx of people and not have the housing supply. Now I understand why they're throwing up the apartments everywhere. Because I mean, you look at the map. Even Orlando is up 53.6%. You know, here's Deltona, there's Orlando, so that's still growing. Then you got Lakeland area, which is a ton of building going on over there. So that area is growing. Everything's increasing in population. Pretty much all of Florida is going crazy. So that's definitely why I think we're seeing that difference. So, and what's going to keep our prices up? Well, here we go. Let's look at the inventory. Our inventory decreased again by 69 homes. And we're down to 4,485 single-family homes right now. And if we go back to October, the end of October, we've lost nearly 17% of our inventory.
Yeah.
We were at 5,400 homes and we were feeling good. It's like, oh, finally, we've got homes. We've got some homes to look at. Now, we've dropped nearly 1,000 homes in inventory. And when you look at the numbers every day, you're seeing that pending new inventory, just listed. And that number keeps, the pending and the sold keeps being bigger than the new listings. So my concern is, okay, our spring season's coming up end of March, beginning of April, where it should start peaking up a little bit. Are we going to have an inventory problem again? And even if we're steady at the 6%, are we going to end up in the multiple offer situations again?
Yeah. I think we're kind of like, we talked about this. We talk about rates dropping, right? Like, what are rates going to do over the long term? And I've been saying this since all the forecasters are saying 6 to 9, 9 to 12, somewhere in this. But here we are, where we get into that buying season, and we're seeing it's not quite springtime. We're seeing rates stabilize, and I think it's because of a larger picture, right? Nationally, we're seeing a little bit different. We're seeing inflation go down, which helps all these things. We're seeing nationally, so the Feds are backing off because of what they're seeing, nationally and everything, right? But Florida is this little microcosm, what the national picture is going to help create and potentially drive Florida's momentum even more, because rates are going to potentially continue to see that decline, but inventory is low. In Florida, everybody's moving to Florida, and we have a great job market that's outpacing the nation. What's going to happen here? We could be, like you said, we could be back into a multiple aggressive marketplace by summertime, because low inventory, great job outlook in the state of Florida, and rates are going to be consistently lowered, as based off of what we're trending so far this year and what everybody's saying. That's like a best of. Now, it's not when we were at 3% rate, but we're going to see that aggressive, and it's going to feel like a big win for consumers, because we were just at 7% a year ago, 6 months ago. So, we get into the buying season now, and if we're at 6 or 5.99 or right there, especially if we back in those fives to go from, oh my gosh, it was 7s, now we're in the 5s, that I got to jump. You're going to get that mentality.
Yeah. And if I'm advising people right now that don't wait for the spring. And we're going to see why in a minute in the numbers. Don't wait till the spring. Right now is actually a really good time to buy. The next month and a half. Wait until, maybe the kids get out of school. Take the jump, because it could save you thousands of dollars in that home you're going after.
Yeah, it could.
Because here's the other interesting thing. Our days on market is actually 44% higher than it was back at the end of October. End of October, we had jumped to about 43 days, but now we're sitting at 62. So these houses are continuing to stay longer on the market. And what happens to sellers when the houses stay longer on the market?
They get antsy. They drop.
They drop. They drop. They give more concessions. And that shows right here in last week's numbers. Original list price to sales price is 90%.
Wow.
Pretty close to 91, but 90%. That's huge. On a $400,000 house, that's $40,000. And if you look at it right across the whole board, it's pretty much the same thing. Under 250, they're 89. Here at the 250 to 300, they're 94. 300 to 400, they're 92 and a half. So it's not just the large houses. It's the middle income areas that are also seeing a good movement by the sellers on the houses. And this is where we can go to our buyers and say, okay, we should be able to get that 3% seller concession.
Yeah.
So let's take advantage of it. Maybe we do a permanent buy down of 1%. So instead of 6, you're at 5.
Yeah.
Make you feel more comfortable. It gives a lot more options.
Exactly.
But if the inventory continues to stay low, which I think one thing that's kind of keeping it there is you've got, like we've mentioned before, you've got people like us at the 3%, the 2.5% are saying, nah.
We're all nose up to the sky, like.
Yeah, no, I'm sticking it out. I'm not doing this. I don't care how much I'm making on my house. I'm not moving because I'm not jumping my mortgage payment.
Yeah.
So that's keeping us. I think that's one of the big things keeping us from getting the inventory pushed back up.
Yeah. To
where we really need it to be. So it's been interesting when you sit and you look at the numbers because it's kind of like, it could break one way.
Yeah. Well,
the path we're headed on right now is spring's going to end up being a difficult time for buyers.
Yeah, potentially. And it definitely looks like that's what's trending. And, I think we're still too early in the season. You mentioned the 2.5s, the 3s, those rates, like where we're at, like you're not going to see people move on from those the way that we've done in the past, because what we will see is people keep those as investments and then buy the next one. So you're not going to see those properties hit the market. People are going to either stay, or the ones that are going to buy new homes are going to say, hey, I've got a 3% rate. This is phenomenal. I'm going to convert this primary to an investment. I keep my 3% rate, so my margins on the investment are greater than they would be if I didn't. And then they move on.
Yep. Yeah, that's a good point. Yeah. I think you're going to see a lot of people do that.
Yeah.
Because, also a lot of them bought it, may have bought in 2018, 2019. And all of a sudden they've got this, $200,000, $300,000, $400,000 of equity sitting in this house.
And they'll potentially maybe, I don't know, do a HELOC for their down payment on a new home. Pull that equity out and use it to buy on the next.
Use it to buy a new home. So that's the way I see it trending right now.
Yep. I'm in agreement with you based off the numbers.
Yeah. Unless we get some absolutely huge jolt, I think it's if I'm a buyer right now, I'm looking at it going, maybe I should go ahead and jump. Maybe I have to, pay an extra month of my lease. What's my lease buyout? But is that $1,500 I'm paying in the rent?
Yep.
Less than the $10,000 it's going to cost me because I get into a multiple offer situation.
Correct.
That's those are the kinds of questions you got to sit down and really evaluate.
Mm-hmm.
So, well, those are our numbers for the week. So, glad to have you back. We'll be back. We'll be back next week. Just to let you know, 1 year anniversary. We've actually been doing this for 1 year consistently. Woo-hoo. We said we would. We did it.
We did it. And now we got to go for 2.
Yep, exactly. Well, take care, everyone. If you like, please hit the like and subscribe on the YouTube, Facebook. Please give us a thumbs up. Looking forward to seeing you all again next week. Take care.